Are you or a loved one suffering after buying Bitcoin? Are you fed up with the huge returns on investment? Fed up with all the financial sovereignty and freedom? Perhaps you're annoyed with Bitcoin's level playing field and predictability, or maybe you're just disheartened with its strictly limited supply and constant growth of your purchasing power. Whatever it might be, don't worry. Central bankers have got a plan for you. Introducing central bank digital currencies, or CBDCs. It's just like Bitcoin, but without all the freedom, revolution, and financial gain. The idea is simple. Why have control over your own money and life using Bitcoin when you can let an entrenched communist central bank oligarchy control it for you? So what inspired us to create CBDCs? The short answer is, you did. When we looked at all the amazing benefits that Bitcoin brought to people all over the world, like financial sovereignty, freedom, sound money, free markets, and free speech, we thought, wow, the debt slaves are getting a bit too close to stepping off that fiat plantation. We better do something about this. Whilst Bitcoin had a good run, it's time for fresh ideas. And who better to deliver them than the people that hyperinflated and destroyed the current monetary system and global economy? It's time for the adults to take over. And the best thing about CBDCs is they are run by licensed, accredited, and regulated central banks. And central banking is a pillar of communism, and nothing bad ever happens when communists run things. The best thing about CBDCs is they take all the worst attributes of the current monetary system and amplify them. Here are some of the features you can look forward to when using central bank digital currencies. Restrictions on how and where you spend your money. High inflation and loss of purchasing power. Arbitrary and unpredictable monetary policy. Highly censorable. Restrictions on the time in which you can spend your money. Counterparty risk. Negative interest rate policy. Politically weaponizable currencies, attached social credit score system, constant surveillance and sharing of your spending habits with third parties. But if that's not enough reason to persuade you, every account opened gets a free travel clock signed by Christine Lagarde. With features this good, I know what you're thinking. Take my money. And believe me, we will. You see, the problem with Bitcoin is that it's just too predictable and boring. Why use a system like Bitcoin where you can predict the issuance and inflation rate of its monetary algorithm hundreds of years in advance, when instead you can just be kept in a constant state of uncertainty on a weekly basis by arbitrary decision-making by a handful of people at the central banks? Another problem with Bitcoin is that it makes things too simple and easy. What's the point in having one neutral platform that's apolitical and provides a completely level playing field on a global scale that can't be gamed by any single nation, when you can have many CBDCs with interoperability issues ran by psychopaths in a constant power struggle with each other? What about the magic money tree, you ask? Well, we've got you covered. With CBDCs, you will still enjoy the unlimited issuance of currency that we can counterfeit at will. Why use a sound money system like Bitcoin, where the amount of Bitcoin is limited, when you can use CBDCs and all become billionaires just like the people in 1930s Weimar Germany? And finally, with CBDCs, there's no reason to worry about corruption. As long as you're politically connected and can afford to pay our ex-central bankers $250,000 an hour to give a speech once they step down, you'll get the same treatment as all the other special interests that use CBDCs. But don't just take our word for it. Listen to all these amazing testimonials.
Without a doubt, the best thing about CBDCs is the integrated social credit score system. Now being able to transact is a great way to remind me when I need my next COVID vaccine. Or if I've said something the government doesn't like.
Like most people, I don't like change. And that's why I love CBDCs. Even though people say that Bitcoin can fix some of the biggest problems in the world, to me it just seems like a lot of hard work having to manage my Bitcoin private keys. With CBDCs, things can just stay the same, and I can go back to Netflix and chill.
So what are you waiting for? Join the billions of other subjugated people all around the world and get your CBDC account today. Central bank digital currencies. A breath of fresh despair.
Coinbase sues SEC after months of silence from the federal regulator. Coinbase asks court to force SEC to clarify crypto regulations. The cryptocurrency exchange has filed the petition along with a long list of questions since last July. Now, why is it important for SEC to clarify about crypto regulations? Here are some important points in my opinion. The SEC is responsible for enforcing federal security laws in the United States. As crypto and blockchain technology have become increasingly popular in recent times, it is important for SEC to clarify its regulations around these new forms of digital assets. One of the main reasons why clarifying crypto regulations is important is because it can provide more certainty and clarity for investors, traders, and also companies operating in this space. Without clear regulations, it can be difficult for these individuals or entities to understand what is and what is not allowed in terms of trading, investing, and raising funds. Moreover, clear regulations can help prevent fraud and other type of illegal activities in the market. With more clarity on rules and regulations governing the industry, it becomes easier to understand, identify, and prosecute those who are engaging in fraud and illegal activities. Finally, clear regulation can help promote innovation and growth in the crypto industry. With more certainty and clarity around the rule of games, companies and entrepreneurs can be more confident in investing and developing new tech, new products with this space. Overall, clarifying crypto regulations is important for creating a more stable and secure crypto market that is attractive to investors, innovators, and entrepreneurs. Hong Kong court declares crypto to be a property in new ruling. In a landmark ruling, Hong Kong's High Court has declared crypto as a property that can be held in a trust. So this is the first time such a decision regarding crypto asset has been made in a city-state. The ruling, which has handed down in liquidation of a case involving the now defunct crypto exchange Gatecoin, essentially puts crypto on par with other intangible assets such as stocks and bonds. EU lawmakers approve world's first comprehensive framework for crypto regulation. Now, this is big in my opinion and wonderfully narrated in this thread by Kashif Raza. So let's read it. First major jurisdiction in the world to introduce a comprehensive crypto law. European Union on Thursday voted 517 versus 38 in favor of a new crypto license regime called MICA or MiCA. It's a very big development. So what it means for crypto. The EU also voted for 529 versus 99 in favor of a separate law known as Transfer of Funds Regulation, which requires crypto operators to identify their customers in a bid to halt money laundering. Now, what is EU? EU is a European Union known as, EU known as European Union is a unique partnership between 27 European countries known as member states or EU countries. It is home to around 447 million people, which is around 6% of world's population. What is MICA? This legislative proposal markets in crypto assets. It's a regulation which was approved by European Council on 5th of October 2022 and now it's passed in the parliament. So MICA addresses crypto assets that are not currently governed by existing regulations, including utility tokens, asset reference tokens, and e-money tokens. So now this is where it gets more interesting and why it's such a comprehensive framework, because they have defined crypto, or they have defined crypto into 3 different categories, which is very interesting. MICA defines a crypto asset as a digital representation of a value or a right which may be transferred and stored electronically using distributed ledger technology or similar technology. MICA will introduce 3 subcategories for crypto assets. Utility tokens, which are crypto assets intended to provide access to a good or a service. E-money tokens, meaning a token to a reference value of a fiat currency. It's kind of like a stable coin. Asset reference tokens. So for a crypto project to launch in EU, it has to be legal entity, register with EU. It needs to submit its white paper and get approval. Take approval for stable coins, and significant stable coins like USDT and USDC will be under European Banking Authority. Crypto services, which includes exchanges, trading and broker and custodian services, they need to register in EU. At least one of the director of the service should be in EU. They need to have a registered office, and also service with no office in EU or based outside need based on reverse solicitation. So this one is huge. Credit institutions, MIFID to investment firms, e-money institutions that are already registered in EU can now provide certain crypto asset services. The objective of this regulation is to provide legal certainty, support innovation, consumer and investor protection, financial stability, and to combat money laundering and finance of terrorism. Transfer rule. Now, crypto services providers need to know their customers and share data among themselves if needed. So that's why they have to be KYC compliant, data sharing norms, and other compliance guidelines. A separate law is also passed for this. So this is a huge, huge step in my opinion, a very positive development. Let me know what do you think, because reading about this regulation and the detailing in which it has been formed, it gives a lot of clarity to me as a trader and as an investor also. And I'm sure such clarity world over will bring in more people into the crypto ecosystem, and it will be an overall net positive in my opinion. Let me know what do you think about this. So the first chart we are looking at today is INJ, that is Injective Protocol, and this is an INJ USDT 4-hour chart. INJ has bounced from a very technical zone of 200 EMA on the 4-hour, which was at around 6.3 to 6.4. And we can see this is a good bounce from INJ. But the only thing right now, if you are wanting to trade INJs, you have to be careful whether this is a lower high and kind of a reversal, which is a potential probability. So be careful about it. Current supports for INJ 8.1. If INJ can consolidate above 8.1, which currently it is doing, it will likely go for the retest of $10 zone. And once it breaks $10 successfully, then we can think of higher targets. But if it rejects this $10 region, or if it creates a lower high somewhere here, then the likelihood of a deeper correction and a reversal is more likely in my opinion. So be careful, because it has pumped a lot, and no doubt it's a very good project, and in long term I think it will go way higher. But if you're looking to trade it, then be careful about this potential scenario. Okay. So if you want to short it, you might get an opportunity to short near 9.5 to $10 region. You have to see where it's making a potential toppy kind of a candle. Then you can short it all the way down. If you want to long it, you can long retest of 8.1 with a stop loss somewhere over here, and then ride it all the way to $10. And of course, if it breaks $10 and again comes back and retests it successfully, then you can long it over here for a higher play. So be aware about your trade zones and no trade zones, and I think you will be good. Overall, this is a very good project in my opinion. The second chart that we are looking at is Render. Again, extremely bullish chart, and it's doing amazing in this market. If you look at a 3-day chart, This is a beautiful chart, but now it's approaching this zone, which was a previous support, and this entire breakdown happened because of the breakdown of this zone. So it's reaching that macro resistance. So be careful if you are holding render, and if you feel like taking profits, it's not a bad time to take profits in my opinion. But again, this is not a financial advice. Overall, the project is extremely bullish. I think it can go way higher if you're looking to accumulate long term. Short term analysis for render, as long as it's above 1.8, it was bullish. It's already reached the first TP zone for me, which is at 2.2, and the next TP zone is at 2.5. For the short term, you're looking currently at the 4-hour chart, but even on the daily, if you look at it, then I think the next major resistance for render would be between 2.7 to $3.2 region. This is the next major resistance for render, and once it can clear that, then we can think of higher targets. So these were two analyses for you, render and injective. Which other altcoins you want me to analyze, do comment down below, and I will make sure to analyze two altcoins in the next video.
We already know in the US and in many other jurisdictions that 3/4 of the market are not ICOs, or not what would be called securities. Even in the US, Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about, 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings and what's a security and what's not a security. Relevant and important debate, but for 3/4 of the market, it's not particularly relevant as a legal matter, as a regulatory matter. Brodish.